Good morning. It's Wednesday. It's Hump Day, November 15th. And you'll see, if you're watching on the video, you'll see in the upper right-hand corner, I got the chat of the live Facebook. So you guys can see what people are asking me. I usually ignore it, so I won't see it. I'm going to try and keep this one short. And the reason I'm going to keep it short, I had a fantastic hour and a half discussion with Jason yesterday from TrendSpider, Jason Krutsky. He went over an Apple strategy that is an hourly Apple strategy, so it even gets you under the 65-minute. Fantastic results to the point where I think he's launching it as a trading bot. So you'll see that. I'll have a link to the strategy. We'll have everything out there. I'm going to edit it down so you don't have to watch an hour and a half. There's probably maybe about 45 minutes that we can do. I'll probably cut it into shorter sections. I think we looked at Apple. We looked at Palantir. We looked at SMCI. We looked at Amazon. We looked at several. And the format of the talk is just, hey, we're going to go over stocks like I usually go over stocks. You guys tune in. You hear me go over everything. And then Jason's adding in the other features that TrendSpider can offer you. Some of the AutoFib stuff, some of the other stuff. He is an absolute master at TrendSpider. I was amazed. I'm sitting there like a little fangirl. Oh my God. You'll see that my reaction of my face is just horrifying. I wish I could take it off the Zoom. I may put a big block over my face in the video. But how'd we do yesterday? This was the face-ripping rally that Tom Lee had predicted on Monday night. So hopefully you're in. Hopefully you're not sitting out of this market. This is the type of market where when you hear, you've got to be in it. This is one of the 10 days that you need to be in the market in order to make money. So I'm getting a lot of questions about what I'm currently doing, where are my moves going. I'm sitting here. I'm literally just sitting here. You can see I think I posted this on Monday or over the weekend, but it's a weekly chart of Qs. And we've got about 5% to all-time highs. If you got in at the low on October of last year, you made 60%. It's about buying during this period. It's about when you feel uncomfortable, saying to yourself, I've got to make this work. And I believe that the NASDAQ, the Qs, is going to go up. Now, if you bought TQQQ, you're up 120%. Or I'm sorry, it's 3 times leverage, so you're up 180%. So that was a fantastic. You can't time it. So say you got in here and you had FOMO in August and you bought in at 324. You're still up significantly. Let's see. Say you bought at the highs here in August of 2022. You're still up 20%. That's 20%. You only have 5% to reach to the all-time highs. Now, I do think those all-time highs are going to be tough to get. The all-time high of about 408 on the triple Qs. You're having a MACD cross-up, so we're still in a bullish move. Now, for me, this is pretty clear. Start buying here at about 313. The 50-day is moving up. It bounced off the 200-day. We're still in a positive momentum. Even if you follow me on Savvy Trader, and let's just go down to Savvy Trader here, because if you follow me on Savvy Trader, you know that in June, I said, let's start a core portfolio of the 36 names that I follow, and let's just buy at the high in June. And let's compare to SPY. We'll compare it to SPY, okay? The core portfolio, the even weighted names, they're up 4.96%. The S&P's up 2.4%. That's buying at the highs. If we compare it to the Qs, the Qs are up 5.23%. The core portfolio is up 4.96%. So I'm underperforming the Qs, but I'm beating SPY. That's always been my goal. Is since I started this podcast, before I was always looking, hey, let me beat the Qs. Now I just want to beat the S&P 500. And NASDAQ's kind of hard to beat, especially in a market like this. You can see SMCI was up 14% yesterday. So that core portfolio, if you want to follow it, it's free, savvytrader.com. You can go over to my Linktree, linktr.ee/daily stock pick. You'll find everything that you need to follow from my podcast. But like I said, the triple Qs, we had a huge day yesterday, just huge. If you're in the market, I'd stay in. There's no reason to get out during strength. It's what you want to get out when you find weakness. Right now, we have strength and we have confirmation. Am I buying? No, I'm not adding to any positions. There's a couple that I find interesting, like specifically energy. Energy's been beaten down. So like, Devon is at 45. I still think that's a $50 stock. Disney's at 91. I still think that's a $100 stock. Boeing is at 208. I think you're at 220 at least in a good market on that one. So there's opportunities out there. Just be selective. XLRE went nuts yesterday. Home Depot went nuts yesterday. It was the beaten down sectors. And what that means is basically it's broadening out. So while it was tech, it's now broadening out, which means we're in a significantly upward market that has momentum. Don't get FOMO. Understand there will be opportunities that you can pull back. SMCI, I've been pounding the table since 260. Add to this one. SMCI just broke the 200-day at 276 in a violent fashion. It's at 298 right now in pre-market. It is up at 300. If we break 300, okay, during the open market session, and it's likely we will. It's up at 298. It did it in pre-market, but I wanted to do it in the open session. If you break that, I think that 345, 350 gets filled. So I don't think the valuation of SMCI is not crazy. If you go over here to FinViz and look at SMCI, the valuation, the forward PE is only 14. If NVIDIA just crushes their earnings, and they are expected to go crush their earnings, I think SMCI goes up as well. And the forward PE of NVIDIA is 29, just double what SMCI is. This one will trade in tandem with NVIDIA. So if you want an opportunity, I think SMCI is a better opportunity because NVIDIA has just run. It's hit 500 in the pre-market. So you're at 499.25 right now. This one was up huge yesterday. So expect this one to probably just run into earnings. There's no stopping this one. Michael Burry, he closed out his short position on the markets. It's being reported that he lost 40% of his $1.6 billion short position. He didn't lose 40% of the position. He lost 40% of the premium. So it's not like he lost the entire amount, but he was a big loser on this position. So it's said that he got out of this one. This is kind of rule number one. Don't listen to a douche on the internet. When he said sell, he put out a famous quote that said sell. It was a tweet, and he deletes all of his tweets. Let's be honest. Michael Burry has called the last 60 of the last 2 big drops in the market. So don't listen to a douche on the internet. IWM was up 5% yesterday. Now, the levered ETFs would have taken this to 15%. If you had any of the levered ETFs on the IWM, this is the Russell 2000. Look at this move in an index, 164 back on October 31st. So November is a strong month. You had this shoot up, and then we had some doubts whether this market was really good. And then you had the CPI number come out. This one just shot up. I mean, that gap between 169 and 174, like I say, have some patience because there's gaps. It's filling these gaps. I think we have probably 180 in the works for this one. It's trading at 178. But the small caps went really crazy yesterday. Now let's talk about Target. There's an article, some of the biggest movers in the market today. Target shares soars 15% in Q3 earnings, surpasses consensus estimates. The company's operating margin rose to 5.2% from 3.9% a year ago. The gross margin rate also demonstrated substantial growth. This is the return of retail to Target. So I think Target is probably a decent bet here. Like I said yesterday, it was a risk reward. You could take the risk. I wasn't one taking the risk. I am still holding Target. I think I sold some at about 115. My average price is about 111. I'm not adding to Target. I'm not getting FOMO. I do think that Target is probably a $220 stock just based on valuation. The problem is the management. I still don't trust the management. So am I adding to this? No. I would like to see this downward trend change. We talked about the long trend on other stocks. Here's a weekly of Target. You still got a negative 50 day. You're going to wind up opening up here with confirmation above the 9-day. That to me signals, okay, maybe we can start doing it. But look at where you've got so far. You've got lower highs. Lower highs just means a downward trend. We need to change that trend. That death cross right there in March, that death cross just signaled, hey, we're going from 160 down. And you had nowhere else to go but down. If you look at Target, when the world was shut down, Target was trading for $99. The world was shut down and Target was trading for $99. And it immediately, in the aftermath, just shot up to $264. Do I think it's at that $264 again? No. I think this portion right here at about $220 provides you pretty good support. If we pull it back here and we're going to go back to, let's just go back to the pandemic. So if you look up here, you've got the biggest chunk of volume support is between 147 and 170. That's where people are holding it. Right now, jutting out here, you still have a huge level of support to get over at 132. You're heading into the empty volume zone. And those volume zones have to add it. What's going to happen is exactly what Zephan said on chat earlier. People are going to be, who bought at 130, are going to say, you know what? If it hits 130, I'm going to sell it. And you're going to have an enormous amount of these people selling. And that's going to put some pressure on the stock. So I want you to just hold it. If you believe in it, it's going to be a painful one to probably hold because I think you're coming back down to about 115 or so. But I do think, personally, I'm just holding it. I'm just holding. I'm not getting out of it. So other movers in this one, Zim. If we want to look at this article, you can see JD surging over 5%. Maybe the coming back of the Chinese consumer, because if we look at BABA, that one's up as well. BABA is up to let's see, 3% in the pre-market. Like I said, we're still in a downward trajectory on this one, but it's starting to turn. And right before earnings, their earnings are after the bell today. It's probably going to be November 16th. Yeah, it's tomorrow morning. So it's overnight is what BABA announces. So if you want it, get into it. JD announced their move. The other one that I noticed was Zim. I think I used to get a lot of questions about Zim. Zim is a shipping company, and when shippers had their way, they had pricing, and they could basically tell anybody that needed shipping stuff, they could name their price. And that's when you got to this $60 price. Right now, you have no confirmation. You have no reason to buy this one. If you are trading Zim, kudos to you, but there is no reason to get into this one. Absolutely no reason. This one could be going bankrupt. That's how bad their quarter was. Let's see. AXP got an upgrade from Barclays. This is American Express. They said it's undervalued. I tend to agree. This chart does not look like the Visa and MasterCard chart. 100%, it just looks like a bad chart. But that 145 might have been the bounce. And as it gets to a positive 50-day, you've got confirmation. I see some gaps up here, specifically between 166. If you think the business consumer is back, this is 100% absolutely a buy. Let's look at Berkshire. Berkshire Hathaway, they announced they exited GM, exited Activision. The reason they exited Activision is because Activision was sold to Microsoft, so they just got a bunch of Microsoft stock and money. But that was a great trade. The key point in this one is this last bullet point. As of September 30th, 78% of Berkshire Hathaway is in American Express, which we just talked about, Apple, Bank of America, Coca-Cola, and Chevron. Those are stocks that you want to hold. They are underperforming. Coca-Cola is underperforming. Chevron is in the energy sector, has just been killed. Bank of America, I think, is a $30 stock. It's trading at $29 right now. Apple approaching all-time highs again at about 198, 199. I think I trimmed some at 195 or so. But like I said, American Express, beaten down, opportunity there. That's what you want to take advantage of, is to read these articles. Again, Seeking Alpha is such a great one. If you want to read, there's been some questions about short positions. This is from Ross Cameron, who's a warrior trader, famous for taking a $100,000 account to over 10 million. Significant momentum trader. He trades high volatility stocks, trades options. He does it live on YouTube. It's warrior trading. I would not pay for his system, but I would watch him. He teaches a ton of stuff. His course, anything that you buy from him, I have no doubt if you want to pay for it, it's probably worth it. It's just expensive, and Ross is he's a great trader, super knowledgeable. This is a background of a short of a biotech company, BPTH. It was an $800,000 short. It lost the guy $16 million. If you want to read that one, solid learning right there. So I think it's an opportunity to get some knowledge in. W. Cred from Spotify asked, where do you park your money that's not currently in equities? I hear about people getting 5% while they wait to catch the market moves. Great podcast. Really appreciate all the work that you do. Well, you know where I park it? I park it, my Webull. If you go over here to Daily Stock Pick and you click on this third link, join Webull, you get 5% on your money. It's paid out daily. So you can see if you've got cash, they just automatically pay you 5%. That's part of the benefits of Webull. Earn 5% APY today on your idle cash. That's 5%. So W Cred, there's no reason. You should basically be clicking on this link. You get 20 free stocks when you click on that link, and you get 5% on your cash. The other thing that I do, if you're not in Webull, I have Fidelity as my main brokerage account. And Fidelity gives me 5% through a bond fund. It's about 4.9. It changes on a daily basis, but what you want to do is you want to go into Fidelity and you want to look at all of their bond funds, and there's a 7-day trailing rate. But all of these banks are talking about, 4.99% on SPAXX. That's a 7-day yield as of 10/27. Click here for the current yield. You can take a look at all of this stuff. They've got tons of bond funds that you can look at, and it basically makes you 4.99%. Webull gives you 5%. It's just a matter of where you're comfortable with doing it. If your bank or your brokerage is not paying you on your idle cash, get the hell out. Robinhood, I don't think, pays you on your idle cash. They might, but I'm not a huge fan of Robinhood. Kathy Wood's a big fan of Robinhood. I'm not. I do think that Robinhood helped trading tremendously. I think they also hurt trading with GameStop, but that's another Netflix documentary if you want to watch it. I think it's just Google GameStop on Netflix and you'll find the documentary. Fantastic documentary, by the way. But you can get 5%. Yeah, that's exactly what you're doing. WCredit, if you are not getting 5%, you're crazy. You can buy, if we go over here to on Fidelity and we go to fixed income and bonds, you could buy a U.S. Treasury for a 6-month Treasury that gives you 5.42%. That's tax free because you're not paying taxes on U.S. Treasuries. You can buy these on the market. You can buy a 2-year at 4.92. The 3-year just went to the 10-year just went to 4.52. But that like a couple weeks ago, that was 4.9%. These things are trading like penny stocks. They don't go up and down like this. So essentially, your worst case scenario is that you get 4.52%. And after 10 years, you get your initial investment back. So you can buy those things. I just tend to like 5%. And so I park some cash in Webull. I have $1,000. Let's see, I put $1,000 into Webull at the beginning of the year. I am now at $25.76. as of this time. So you can remember a few weeks ago, I was at 2,400. It's not that I got bonus stocks. It's that, I've invested in Apple. I've invested in Google. I've invested in Boeing. I've invested in TQQQ. I've invested in IONQ. Let's see, my TQQQ right now. And I do it every now and then. It's not big buys. I think I've got $200 in there on TQQQ. I'm up 30% on that. IONQ, I'm up 15% on that. Apple, I'm up 40% on Apple. So it's just about putting, and Apple's the biggest position that I have. That's about $1,000 of Apple that I have in Webull. So I tell people it's like my savings account. When it dips, I just buy, and I buy one share, or I buy $100 worth, whatever I think I can afford. So there's where you can go for your cash. I do think it's an opportunity for you to get into Webull. I would suggest Webull. I would suggest using that link, getting into Webull, and it gets you 20 free stocks, plus you get the 5%. So if your money's not earning, make sure that you get it into a place where it'll earn. Now let's talk about scans. Scans are ones, if you get TrendSpider, you can do the scans yourself. I provide you the link to do the scans, and you can find these. I provide you a link for the daily stock pick core portfolio. You can scan the core portfolio. You can create a list with your own brokerage holdings. You get this covered call, you get the energy names, you get the levered ETFs, you get the low cost Vanguard, you get the spider sectors. You get all of that. And you get the scanners where you can do it. You get the scan for the 65-minute. You can say, hey, I want to create an alert for a 65-minute. You get a scan for a 4-hour. You get all the tools that I have when you sign up for TrendSpider through this link. This top link right here on linktree/daily stock picks, linktr.ee/daily stock pick. The link is down below. But here's the prices. And elite is what you want. You don't want the lower portion. You want elite. You don't want essential. You don't need elite plus. If you think you want to trade with elite plus, you can. But elite is really the sweet spot. And it's $43.45 per month. This is the Black Friday sale. You're saving 45% because it's usually $79 per month. So if you want to go for a month, it's $43.45. You get a 7-day free trial. This one is a year. You're saving 60%. It's $31 a month. It goes down to it's $382.20 per year. You do get a 7-day free trial, so you're not charged until day 7, and you're charged $382. But if you've watched me a long time and you're just like, hey, I just want the algorithms, I just want the scans, it's $296. And I'll say it many times on the call with Jason. You'll see it if you watch it. That $296, if you've got big enough trades, I put $20,000 into Amazon right before earnings. That trade alone, 10 times, $20,000, 20% gain, that's $4,000. I was able to time this because of TrendSpider. I looked at the chart. I looked at, I said, hey, it's just down too much. And I looked at the weekly and I said, here's what I said to myself using this chart. I said, right before earnings, you're back down to where you were in October before you started that deep drop. I didn't think we were going into another deep drop. And I thought that those October lows were probably about right. So I said to myself, if I go down to 115, I'm not that worried, but let me buy it here. And I'm up 20% on that one. Again, that's what, $4,000? So the cost of TrendSpider is nothing. The cost of Seeking Alpha, $50 off, it's $189. For less than $500, I've got 2 tools that provide me the tools that I need to make money. And that's essentially what I do. My system is my system. Again, I have years of trading, so I understand my system, but it's about creating your system. So let's go over the scans. And what the scans are stocks that in the 4-hour algorithm provide you a buy opportunity. Here's PXD, 236.59. You're trading at 236.91 in pre-market. I don't know that I'd necessarily get in here because remember, you get the special dividend, which is great. It's about a 1% yield, I think, 1 or 2% yield. Just for this particular one, not an annual. It's you'll get 1 or 2% off your money if you buy it. You do get 2.33 shares of Exxon when they complete the transaction. With Exxon trading at 104, this isn't a horrible price. 236. I think as Exxon moves up, this will move up. This is just going to trade with the price of oil, just like Exxon is. So PXD has a buy. Now Target has a buy on yesterday's candle. 110.67. You ain't buying it for 110. Right now it's at 126. Like I said, I am not doing anything with Target. If you think the Target's turning around and we've hit a bottom, continue to go. Personally, I would say wait for the weekly. Wait for the weekly turnaround. But Target is in this list because it does have a bullish sentiment on the 4-hour algorithm. MPLX, this is another oil company. I bought it for the dividend. You will see this one kind of bounce around here to 36. It is not one that you buy for a long-term kind of, oh my God, I'm going to trade this and make 10% right now. You can see this is the weekly chart. Just an upward trend with a solid 8% dividend. Let's look at MPLX. Let's see, 9.10. So you're making a solid dividend with an upward trending stock. It's not going to bump 10%, but it's a solid movement in this one. Let's see. Right now, let's see, $35.70 is the buy. Now, understand my algorithm. If you trade this one over 2 years, there's 26 positions. So that's about one trade per month. You lose 3.97%. 3.9%, I'm sorry. It's down here. If you bought and held, you've made 14% plus you've made that 9% dividend for 2 years. So you've made 18% plus 14%. Solid gain from an oil company. SPG. This one is Simon Property Group. I told you before earnings about 110. I thought 110 was a solid price here. 103, even better price. I thought anything around 100 would get blown away. It did. You're at 120. This is secondary cross up because my algorithm is based on a MACD. Anytime that MACD crosses up, I'm going to get an alert that says, oh my God, this is one that is in a solid upward trajectory. The gap that you're going to fill is 123. GE Healthcare, GEHC. This is a rather new stock. So if we go to a weekly, we don't have a 200-day, but you're just crossing the 200-day. That 50-day is starting to move positive. Do I think 72 is crazy on this one? No. I think you get back up to this $80 realm. So I think you do have at least 10% in this one. This is a solid company, great earnings. Rivian crossed up. Rivian, I think it's a $30 stock at some point in time this year. I think it's a solid $30 stock. I think there's $16.74. What you have to know about Rivian is they are not making money. They will not make money anytime soon. They are losing a ton of money on every vehicle that they sell. But Rivian, solid player. They are not going bankrupt. They will be around for a long time. The earnings have already passed, so the catalysts are out. But I like that stock. ARKG, I know nothing about genomics. Kathy Woods knows a lot about genomics. I'd be a little bit careful of this one because just ARK funds in particular, I'm not a huge fan of. But $26 is the buy. You're at $26.38 right now. So ARKG is a buy. I did forget to go over for yesterday. Someone SoFi. I put it in the newsletter. My analysis of it. I just don't know what the catalyst is for this one to continue to go up. You had your earnings. I think it's a $10 stock. The problem with SoFi is if you go over here, the forward PE is 115. Super expensive, still losing money. The second they start making money is when you want to turn around and be in this stock because it's a $10 stock. It's not going anywhere. They're not going bankrupt. I don't think they're going to dilute anymore. They have cash on hand, $3.90. They have 933 million shares. So they're not losing enough money to actually go out of business or to dilute you. Neither was Rivian, but they wound up diluting a little through bonds, not through the stock. Cisco, solid tech play. I mean, it's under its 200-day. It's above its 50-day. You got some solid movement there. You got earnings coming up. I think it's, today after the market. I think they'll announce something good. So, 53, it's not crazy overvalued. The PE is 12. Is 17. The forward PE is 12. So if they come out with decent growth again, I think you're seeing this $58 pop. I think you could see a 10% move in this one. But again, earnings, I think it's going to be a little hard. 3M, I'm not a big fan of the company's ethics. So I'll just say it's been on a solid move from 89 to 94. It's been a beaten down stock. On the weekly, you still have a severe downward trend. It just showed some momentum, so I thought I'd bring it up. Intel. Intel is a company that it's just been soaring. I mean, the buy was 35.47 here. You're at 39. That buy was October 30th. Again, buying at the end of October, beginning of November, solid play just because November was a solid, seasonal month. But it's up. It's overbought at 65. The MACD is well up here. I worry about that a little bit, but you do still have confirmation. If we look at this from a weekly perspective, you're not even at your 200-day. So your 50-day is now moving positive. Your 200-day is at 45. It's still moving negative. But if this one starts to take off, you could have a golden cross and you could continue up here towards the 50s. So the valuation would be crazy at the 50s, but you could do that. Kraft Heinz is one. Sirius Logic. This is satellite radio. This one has been beaten down. It is up 12% in pre-market. Didn't know why. Found out Berkshire Hathaway bought a ton of shares. I've been burned on this one before. This one has a solid base here at 619. I just don't see people paying for Sirius when you have Spotify, when you have Apple Music. I just don't see it. Honestly, I just don't see it. One that I want to point out is DPST. Yesterday, DPST was up huge. It was up big. The regional banks, you can see, we went from about $50 to $61. In pre-market, you're down 0.08. It's at 61.22. Market just opened. So you're up here. You've got a gap down here. I would be worried about this one, but regional banks just took off yesterday. Right now in the market, if we go to Seeking Alpha, and we can look at the market. Let's see. The markets will pop up here. Seeking Alpha, you can sign up for free. You can use the paid version. I love the paid version. I honestly, the two that I think are worth it are TrendSpider. Like I said, under $500 for the year. You can see Dow's up slightly, 0.31. So it's we kind of came back down. Yesterday, we had such a big market. We've kind of come back down. Let's look at SPY. SPY is up. Let's see. 0.33. So you just you got this gap from yesterday between 441 and 445. You're at 450. I would expect today to be a little bit more tame, but it looks like a ton of stocks are taking off. I would expect a little bit of a profit taking maybe in the afternoon. SPY in particular, I think you got this gap within range 453 to 455. So if you have any questions, you can hit me up. I had a bunch of people email me. Use the link tree, linktr.ee. You got the TrendSpider sale, which we went over. Seeking Alpha, you get $50 off. It's $189 for a year. Fantastic, fantastic service. You get their quant service. You get to import your portfolio, and you get a portfolio score. I can show you my two portfolios. I've got the core portfolio in here, which is the main one. This one gets a score of 3.74. It actually rates each stock for you, and it alerts you when you have a weak stock. What I really like about this one is when you import it, it will alert you, watch out, you have one stock at risk of performing badly. It's a 3.59% out of 5 score. I really, really like Seeking Alpha on that one. Webull, like I said, 5%. If you're not getting 5% on your join Webull, use that link. The Daily Stock Pick newsletter. This is a free newsletter I put out with all my notes, with the charts and things. It's free during the week. It's paid on the weekends. I'm going to up the price here soon to probably about $100 because I do have enough content in the archives. So it'll be $100 a year, $10 a month. So you save basically 2 months for free when you do the yearly. But there's that. If you're paying anything more than $25 a month for your phone service, go over here to Visible. It is let's see, check out our plans. I'm hearing a backup of a truck. But it's $25. That's what you pay. There's no fees on top of this. It's $25 and $35. So if you're paying anything more, you're crazy. You're out of your mind. Use that link. If you're buying a Tesla, buy it here. You get $500 off and free full self-driving capability for 3 months. The AT&T Fiber link, I have 1 gig service. That is why I look so pretty, even with my cut hair. It is 1 gig service at my house. I am a big believer. I am an ex-executive at the cable companies. And I will tell you, I think fiber's better. Cable does share their wires. And particularly, I'm on a cul-de-sac. And I know a lot of my neighbors have charter service. And charter service, when I've had it in the past, it does bog down, during prime time. So watching those Thursday night football games on Amazon Prime, I'd rather have 1 gig service. Savvy Trader we talked about. You can find anything else. If you want to tip me, the tip stuff's down there. It's the holidays. Say I love you to your boy. If you want to email me, my email is up here in the upper right. So watch out for that Jason video. It's coming out. I'm going to go and edit it. Hopefully this one's a short one. I probably talk too much. But again, if you have any questions, hit me up on any of the socials. Okay, talk to you later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.